I want my clients to stop and really think of what are they trying to achieve by putting money aside, either on a monthly basis, an annual basis, wherever their money is. What are they trying to achieve long term? Is it just getting a 10, 15, 8% return? I refer to them as golf, again, the golf clubs. Everybody wants to focus on getting big returns with their money, and that's really important. But it's also about half of the total solution. And if I were to ask my clients, what is your goal? The knee jerk is to get good returns. But I think when they think more about it, it's not about just getting good returns. It's about having your money be in position in such a way that when they get to retirement and they have no more income coming in from their employer or their business, is their money structured in such a way they can actually spend and enjoy it without the fear of outliving it. And ultimately would be to maintain the same lifestyle that they have prior to retirement. It's very easy for me when I sit with someone for the first time. It's very easy to make them realize that what they're doing and how they're preparing for retirement is so way off from what they ultimately want to achieve. People come in when I ask them what their goals are and their goals for retirement planning. There's so many of them, and people have got different answers. But the one universal answer, and generally I have to suggest it, I always suggest, would you agree that the ultimate goal is to maintain the same lifestyle? And they may have come in with 15 answers to my question, but when I say that, everybody agrees. Yep, you're right. How do I maintain the same lifestyle? That's what everybody agrees on. But when then I do some analysis with some software and some other ways we lay things out, some assumptions, but it's very easy and very quick. We are able to very quickly ascertain that they are not anywhere near on path to live that same lifestyle. I give people a choice. Do you want a financial plan designed for you to live frugally and leave your kids and Uncle Sam most of it? Or do you want a financial plan designed for you to maximize what you spend and, oh, by the way, leave your kids what's left? And again, I've got a few children. I got 4 kids myself. I want to leave them a lot of money, but only what me and my wife are done with, okay? So everybody agrees with that. Everybody wants to be able to spend and enjoy their money. They want to blow it, for lack of a better term, and leave their kids what's left, but nobody is set up in a position to do so. That is without question the number one thing we do. And let me try painting the picture. So everybody wants to spend and enjoy their money. So let's just take someone, and I've used these numbers before, say someone with a net worth of, they've got $2 million laying around. And by the way, I don't care if someone's got 200,000 or 20 million. This strategy or this problem exists. So someone say 65, they've got a $2 million nest egg. They've been taught by traditional advisors to live off the interest. And what is the benefit of living off the interest? The benefit would be, okay, if I live off the interest, I never outlive my money, which is good. So let's take that scenario. Let's say the senior is 65 years old. They're living off the interest. And then interest, by the way, is less. Let's say 5%. Nobody gets more aggressive during retirement. They get more conservative. $2 million at a 5% living off the interest rate of the return spits out $100,000. So people would sign up for that. That seems like a good plan. $2 million spits out $100,000 a year. Whether that's enough or not, let's not discuss that now. The point, it's $100,000 a year. That sounds like not bad. Here's my question. What about the $2 million? What about the principal? Who's spending and enjoying that? Most likely Uncle Sam and your kids. Most people clearly want to spend and enjoy their money, but nobody has a plan to do so. And that's the number one thing that we're going to fix. We want to show you how to spend and enjoy what you want. We want you to live off what you want, not what you need. It makes me laugh when I hear people tell me, oh, here's what you're going to need during retirement. Well, wait a minute. The couple took 3 vacations a year. They bought a new car every couple years. They fixed up the kitchen every couple years. They did home improvements. What now? Because the person's retired, the couple's retired, all that stuff's out the window. They're going to still want to do that. To me, living off the interest is a need-based plan. And I can't stress, if you want to settle for living off what you need, terrific. That's easy. I want to put a plan together that's going to allow you to live off what you want. One is based on frugality, and one is based on abundance. And that's what we're going to help you do. And that is without question the biggest benefit to working with us, because that's our number one goal, is to position your money so that you can actually spend significantly more. If it's only a little bit more, keep doing what you're doing. But if we can't significantly improve the amount of money that you're going to spend and enjoy during retirement, give less to Uncle Sam. And oh, by the way, when you pass away one day, you and your spouse, if you're married, your kids will get a few bucks also. Well, let's talk about annuities right now, because a very common question I'm asked is, when I get phone calls, people watch the presentations, this guy's selling annuities. No, I'm not. I'm not a big fan of annuities at all. There's a lot of annuities that are extremely safe out there, so they're good at protecting your money. Here's the problem. They're not getting a fair rate of return. So for anybody watching this, any other advisors, I got a ton of advisors who watch these presentations. We are not pushing annuities. There's so many other better things you could do with your money than an annuity. Again, not that an annuity's bad, but we think there's better stuff out there. So I want to get that right out in the open. An annuity does not pass the fair rate of return test. What I generally see when clients come in are that people have a junk drawer of financial products. They have, and 80% of it is stock market related. Clients either have their money exposed to the market, where they're hoping to get great returns, or they have their money very conservatively invested, which is safe, which is good, but they're not earning anything. And that's a problem, because if they're overexposed to the market, it brings a whole bunch of anxiety to them, undue risk, and I refer to that as financial hoping, because there's so many things out of their control. Think about all the world events that impact someone's retirement, in particular the stock market. Some kind of protest in Greece, a war in Iraq or Afghanistan or Korea, wherever. They all impact how the stock market's doing. Tsunamis. When the tsunami a couple years ago, when that happened, everybody was bracing. Well, how was the stock market going to react? It's a shame. You can do a great job saving your money, but one protest across the globe is going to impact your retirement savings. It shouldn't be like that. There's things you can do. There's places you can put your money in vehicles that are shielded from all that turbulence. People are financially hoping. They're not financially planning. Putting money starting at 25, 30, 35 into these qualified plans, and talk about the ultimate timing game. People are hoping that, all right, I'm going to put money for 30 years, and I'm going to have the amount of money I want in 30 years from now. That's hoping. And oh, by the way, taxes, inflation, world events, they all impact and erode what you're doing in the stock market. That is not financial planning. That is financial winging it. And you can't afford to do that. There are strategies that you can put in place that you have to deal with someone other than just a stock market expert. I'm not saying you shouldn't have money in the market. That's not what I'm saying. But the amount of money that's there, and the fact that it's so lacking in helping people achieve their financial goals. We've been brainwashed to again, utilize all these stock market vehicles. There's so much better ways to achieve your goals than utilizing the stock market. There's so many things you can do to complement what the stock market's providing. We want a plan that's going to work regardless of the circumstances. And do we bat 1,000 every single time with our clients? No. We're not miracle workers. We're not, I'm not saying that we're going to make everybody's financial plan perfect. It's just got to be a lot better than what they're doing with no change in their cash flow. And that's what we achieve, most of the time. The market's actually having a good year. That's terrific. I want the market to do well. But let's face it, over the next 2, 3, 4, 5 years, we're going to have a negative 10, 15, 30, maybe bigger drop. We know it's coming. It might be 2 years away, 6 years. When that happens, my clients are going to sleep like a baby because they're not going to lose a penny. So when someone comes into the office, here's what we're not going to do. We're not going to tell you to get out of the stock market. The first thing we're going to ask you, are you happy with the stock market? If you're happy, terrific, stay there. But everybody has a piece of your portfolio that's not in the market, regardless of age. Let's say you're 55 years old and 60% of your money is in the stock market. Well, what about the 40%? Where is that? It's generally invested in conservative investments that are safe. That's the good news. But the problem is they're not earning a fair rate of return. And by fair rate of return, I'm talking again in the 6 to 10% range. They're safe but not earning anything at all, particularly today in today's economy. So that's where we start with. Give us the safe piece of your portfolio. I will put the strategies and products that we implement for our clients against anything they have, including the stock market related investments. But we'll start with the safe piece. And 9 times out of 10, next year, you're going to slowly move all of that risky stock market related investments over to the better, safer places we're going to put your money, again, without all the risk. The financial planning business is a tremendous business to be into. You think about this, and I can't stress this enough. What is the goal of most businesses? The goal of most business is recurring revenue, isn't it? Think about all the examples out there. You buy a cell phone. The cell phone's free. Why? Because you're going to get a $150 bill for the next 5 years. Why is the alarm system free when they install it in your house? Because they're going to bill you $50 a month forever. Think of a Blockbuster account, a Netflix account, right? Why is it so cheap? Right? They want recurring revenue. There's a million examples out there. Well, the financial planning business is no different. When you put your money into an IRA or a 401k, it's locked up for 10, 15, 20 years. And what have you done? All you've done is solidified the recurring revenue of all these businesses. Now, you can sit there and analyze that all day long, but that fact is not going to change. So it is such a tremendous business to be in from the income side. So that's why so many advisors get into the business. And so again, the ecosystems around it, the companies that benefit by your money being locked up for 20 years. But you got to stop and analyze it. Is it best for you? And when my clients are done working with us, again, they're blown away and they all wish they had met us 10, 15 years earlier. 50% of the time I sit with people who have advisors. The other 50% don't. You'd be surprised how many people are out there solo, getting no advice from anybody, and they're just, again, their form of a financial plan is just maxing out the 401k. I encourage all my clients to get a team of advisors. One person, including myself, does not have a monopoly on all the good ideas. You owe it to yourself to surround yourself with a team of people. If you do not have a team of advisors, we can help put one together for you. Well, everybody has a different area of expertise. So that being said, I would apply, my firm, we would apply to be the quarterback for all the advisors. Someone's got to take the lead. I'll put our strategies and financial opinions and recommendations against anybody else's out there. But ultimately, it's up to you to do what's best in your interest, what you think's best for you. I get paid solely on commissions. I make money from the products and places I put your money. Okay. Keep in mind, if the plan that we put together is not significantly better than what you're doing, don't implement it. But it will be. The commissions that we earn are significantly less than the recurring annual fees that are coming out of these mutual funds and advisory fees for the next 10, 15 years. And keep in mind, 2008, when everybody lost 38%, in the stock market, 40%, 50%, advisors still got paid. They made money when you lost 30 or 40%. I've got a fundamental problem with that. And I think most people watching this would agree. Nobody wants to lose money in the stock market and pay advisor fees as you lose. That's add an insult to injury. So yeah, I'm going to make a buck, but none of it's coming out of your pocket. It's all commission based. Well, when people are done work, when they go through the process with us, I don't know how else to say it, but they're blown away. And not just based on opinions, based on track records, and the financial strategies are so sound and so fundamental. They're simple. That's what I think is what people can't get over. Why it's so simple? Why aren't more people doing what you're proposing? I highly recommend everybody go to the testimonial section on our website. Listen to what my clients are saying about working with us. Our clients I joke, but our clients become apostles. I believe so wholeheartedly in what I'm doing. I believe with all my heart that I have the financial cure, the cure to financial cancer. If you're looking for someone who's going to care about your finances as much as you do, then we need to talk. What fuels me is the reaction from people when they leave our office. I mean, they leave and they tell people. I don't need high net worth people. So if you are a high net worth individual watching this and you've got all the answers, we don't need to get together. I'm looking for the person. I don't care if you're 26 years old and saving $200 a month. I'd rather work with that person than the multimillionaire that's got all the answers, is not open to new ideas. But one key thing that I need with all my clients, I need one of two things. I have clients that are 22, I have clients that are 75. I've got high net worth clients and I have people just, again, all they can afford to save is $200 a month. I want somebody who has the desire to improve their plan and can do so for long periods of time. I'm not looking for people for a quick fix. If someone's looking to get the best rate of return on an investment over the next 2-3 years, that is not what we do. We need chunks of money. We need $25,000, $50,000, $100,000, $200,000. We've got clients that give us literally millions, and we've got clients that we have $50,000 with. But the key thing is they don't need it in the next 2, 3, 4 years. We want to let it do its thing in the places and vehicles we're going to put their money. We got to let it go. The other thing, again, we need cash flow. We need someone who can save money, but do so for a long-term basis, because it's the strategies that we're implementing. The strategies need time. They need time to grow and do their thing. If you're looking for a quick fix, that's not us. I want someone who's committed. Frankly, I want someone who's read the book, who wants to implement the strategies. Right? Here's who I don't want to work with. If someone's looking to make $1 million on Facebook, right? How'd that work out for people? That's not us. I'm not saying you shouldn't do that. I'm not saying that you shouldn't have some of your money in those kind of investments. And a lot of our clients do. But that's not what we do. That's not our unique ability. But yeah, it's like when you go to the casino. Everybody wants to talk about when they won. Nobody wants to talk about when they lost. You're not going to have any losses to talk about when you sit with us. It's going to be we're going to help you get rich slowly. What can my clients expect from us? Here's what they can expect. First and foremost, access. We are the number one complaint with advisors is once they get your money, you never hear from them. Okay, you will not have that problem with us. I promise you that. Accessibility first and foremost. We are going to significantly reduce your risk of loss. Okay, we are going to get you fair rates returns in the 6 to 9% range, sometimes a little higher. We're going to reduce your taxes, and we're going to do so without changing your cash flow. Do we achieve all of this every single time? Again, no. But most of the time we can. But if we can get 3 of those 4 bullets without changing your cash flow, who wouldn't want that? Okay, that's what you're going to get from us. If our plan is only marginally better than what you're doing, we won't waste your time. With me and my firm, you have a group of people that are committed. We're committed, and we are going to improve your plan. And again, we encourage people to, by all means, they can come in and sit with us all day long. Every single person is welcome to come sit with us at our office all day. But we also we're not bashful about doing a conference call at first. Because why? Because if we can't make a significant impact on their plan, we'll tell them to stay at home. We don't want to waste their time. We value their time. We value our time. But if someone's got the commitment, again, they can save. They've got chunks of money they don't need. We're not miracle workers, right? If someone is on hard financial times and can't put any money away, guess what? Call us when you can. We're happy to work with you.